Welcome to the 42nd installment in Trading Strategy Guide's Trading Education Series. Today, we're going to continue our look at the volume indicator. Let's get started. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Last week, in the first volume indicator video, I talked about how to use the volume indicator itself, and this second part will cover some quirks of volume indicators. Once again, I'm pretty sure all you guys know what a volume indicator is, but just in case there are a few out there that don't, I'll take a second to bring everyone up to speed. The typical volume indicator is a histogram that shows how many shares, lots, or contracts of a particular market were traded during the time slice in question. In last week's video, we discussed how to use the volume indicator to give you an idea of how the smart money traders are trading the market in question, because typically only the big banks and hedge funds can generate the amount of volume that actually moves the markets. Of course, we learned a new lesson about that over the last couple of weeks, as the market was moved by a sizable group of retail traders that had come together to cause GameStop, among others, to shoot up and create a short squeeze against the hedge fund traders who were all heavily short in GameStop. But while we learned that retail traders can band together and change the fact that the volume gave clues as to what was going on. I'm going to digress just a minute and show you what was happening on this hourly chart of GameStop. First, you'll notice the big volume was put in right here before the price moved much over $150 here. All this huge push up to 500 was done on very small volume. Remember last week when I said that the volume gives us an idea of the importance of a price move? So the first conclusion you should draw is that the price may have pushed way up here, but it wasn't going to stay up there. Knowing in retrospect what happened, I would say the retail traders ran out of money while the price was still down here, and these levels were heavily defended by the big money traders as they attempted to protect their shorts. But as I mentioned, all this mess up here was done on very low volume. The next thing I notice after all of that mess, on February 2nd, the big guys successfully pushed the price back down right here just a bit, but then on the very next day, the retail traders were able to rescue it and push it back up almost to its starting point on the 2nd. So far, it looks like that may be the last push from the retail traders. I'm pretty sure they have smaller pockets than the big guys. Now, I'm not sure how many retail traders got caught buying up here around the 400 or higher level, but if they had watched the volumes, they would have realized that this was not a real move, and they would have known better than to be buying up at that level. And that's the very reason why the volume is my favorite indicator. So I was going to talk about the quirks of the volume indicator, wasn't I? I just got caught up in this GameStop thing, and I think it's a great object lesson, and it's well timed for this video. But the first thing I'd really like to discuss is the volume in the Forex market. As you may know, the Forex currency market is the largest in the world. As of 2019, the Forex market consists of 39 different currencies and traded roughly $6 billion daily volume. Now that makes it pretty liquid, which is trader speak. Investopedia defines it as the extent to which a market allows assets to be bought and sold at stable, transparent prices. So a very liquid market would allow you to buy and sell large volumes without affecting the price very much. Here's the rub. The Forex market is a distributed market. For example, if you were to trade GameStop, you would have to go to the New York Stock Exchange to buy or sell it. The same for, say, General Electric Corp., Dollar General Corp., or any of the hundreds of stocks that trade on the New York Stock Exchange. So the New York Stock Exchange publishes the complete volume details of the GameStop trades. There's nowhere else to look for volume information about GameStop or any of those other New York Stock Exchange issues. And the same applies to the NASDAQ issues, Chicago Board of Trade, the Chicago Mercantile Exchange, the Eurex in Europe, the London Stock Exchange in the UK, and the hundreds of other stock and commodities exchanges around the world. But it doesn't apply to Forex because Forex is traded at a lot of smaller Forex brokers that only track the volume and details of the trades on their particular broker platform. As you may know, there are probably hundreds of Forex brokers: Awanda, Forex.com, FXCM, Alpari, IC Markets, and so on. Each of these brokers has their own platform and track only their own trade volumes. With that having been said, many of these brokers use the MetaTrader platform and a universal price feed, which probably contains a more comprehensive volume profile, but that information is tough to come by. So I've talked long and hard about using volume in my trading, but what about Forex volumes? Here, all I can present to you is my opinion based on 15-ish years of trading experience. The volume numbers I use on the Forex charts seem to work the way I expect them to, so I just decided to use them in the absence of anything better. I suggest you not just take my word for it. Do your own research. Satisfy yourself that the Forex volumes are useful in your trading, or find something that works better for you. That, in my opinion, is the biggest quirk of the volume indicator where Forex is concerned, but there are just a couple of more that I want to share with you. The first is primarily on the MetaTrader platform, but I've seen it on others. Here's an hourly chart of the Australian dollar, US dollar. To add the volume, you right-click on the chart, select Volumes, and there you go. The volume bars pop up on the bottom of the price chart. And here's my pet peeve. Look right down here. Where does the volume bar start and the candle wick end? Who really knows? I guess if you look really carefully, you can see the difference between them, but I don't want to have to look carefully. I want to be able to glance at a chart and understand what I'm looking at immediately. The solution, of course, is to click the indicators button, select volumes, and volumes here, click OK, and you will get a volume indicator in a separate window pane. And that, as you probably know if you've been on this channel for more than a minute, is exactly what I do. But here's my second annoyance. What good is a volume indicator without a volume average? If you can't tell what the average volume is, then you can't tell when volume is spiking or dropping below the average. Unfortunately, MetaTrader doesn't have a solution for this problem built into the platform, so you have to go to a third-party indicator to get a volume average. I have a couple that I've used, typically the Volume MA indicator and the Better Volume indicator are a couple of really good ones at the MT4, MT5 codebase. I'll link the codebase in the description below so you can check them out. Here's an example of the Better Volume indicator. I've just recently started using this and I like it. While TradingView will put the volume indicator in the same window as the prices, it's an easy process to move it to its own pane by right-clicking, selecting Move to, New Pane Below, and it just jumps right down there. And of course, the volume indicator that's built into TradingView has a moving average built into it. You can right-click and select Settings, or click on the settings gear icon right here, select Style, and click on Volume MA, and there you go. So kudos to TradingView, right? The truth is, I haven't found a trading platform that I like any better than TradingView at this point. By the way, I would like to say I believe that the process of putting the volumes on the same pane as the prices probably dates a long way back, so I guess I can allow for it. That's it for today's video. Next week, we're going to look at how moving average indicators work. Come back Friday for my strategy of the week, and next Monday for my trade picks. My videos come out at 3 p.m. New York time on those days, unless we have technical issues like we did this week. Don't hesitate to ask any questions you may have. Remember, the only stupid question is the unasked one. If this video helped you, smash the like below, subscribe, and hit the bell if you want to be notified of our videos in the future. Have a great Wednesday, and I'll see you on Friday.